Well, hello everybody, and welcome to this super special edition of Fantastic Female Fridays. I have been really waiting for today because we have a really interesting conversation to have today all around great women who have been living throughout history and teaching us a huge amount in preparation for enabling us to be the investors that we are today. So, here's the way today is going to work. Number one is what I'm going to do is I'm going to take you through exactly how women have risen to prominence in the financial markets over a period of time. And I'm particularly going to refer to a book called In the Company of Men, written by Eileen Scully, an Irish woman who has looked into the path of men and women and how they have followed a similar path, possibly parallel sometimes, and reached their destinations at differing time frames. Second thing then that I'm going to do is I am then going to take you through a couple of quotes that I found in Ladies of the Ticker. This is a book written by George Robb, and it traces out the path of female financial liberation over time. I'm going to read you a couple of quotes from there so that you can see that right throughout as we go. And you can really see the pivot points that happened when it came to women, financial freedom, as I say, financial liberation, etc. So I'm going to take you through those as well. Then we are going to take a look at some very interesting women from the past and one from the present. Some very interesting women who pursued massive fortunes back at various different stages right throughout the history of the financial markets. And then you'll be able to see just how savvy these women were, what they did. Sometimes their histories weren't exactly blessed entirely in white, as in that they weren't all perfect at all. But let's just look into those and let's just understand and get a sense of what they did and what we can learn from them. And then, of course, I'm always going to be super happy to take your questions and to hear your chats and so on. So I'm going to first of all check on over here over to the chat and see who's there. So hello everyone, you're all super welcome. Please do pop in your locations there into the chat. I always love hearing from where you all are. And of course, it's also my pleasure to be here with you today, live from Dublin. That's where we are recording this, going out to everywhere in the world through this great platform that is YouTube. So I see here that we have Julie. Hi, Julie. Great to see you and thank you very much. We've been meeting regularly now over the past while. So great to say hello to you there in London. I can also see here Yogesh is here. Hi, hello indeed Yogesh, you're super welcome for coming along. Hello, I see there Ardal, my lovely husband. He's there in Ireland. Hello Ardal, great to see you and delighted that you're able to tune in today. And indeed to everybody else who has come along. Oh, hello Julie, another Julie from Aberdeen. I lived in Edinburgh once, Julie, beautiful part of the world. So as I say I'm going to do is that I'm going to start off here with the first book. And this here, let me show you this one here. It's called In the Company of Men. It's written by a woman called Eileen Scully, and a woman that I know from Twitter in particular. And Eileen, hello if you're watching. And particularly what Eileen did is that she traced out exactly when women rose to prominence in the financial market. So let me tell you a couple of these, for example. So in 1964, Isabel Benham was the first female partner, which made her the first of RW Prestwich and Co.'s 55-year history, which made her the first female partner of any Wall Street bond house. Hello Lan, hello indeed, good morning from Ottawa, Canada, you're most welcome. Then in 2018, only the other day, Stacey Cunningham was named the 67th president of the New York Stock Exchange. It was the first woman to hold the position. And also in 1967, Muriel Seibert was the first female member of the stock exchange. When we get on to Fortune 500 CEOs, Catherine Graham was the first female Fortune 500 CEO of the Washington Post, and that was back in 1972. And then Eileen goes on to talk about these in a range of other elements. She talks about emotive, she talks about naval admirals, she talks about US cabinet appointments, she talks about corporate governance. 1934, Letty Pate Whitehead was the first woman to serve as a director of a major corporation, and that was Coca-Cola. So that book is actually very interesting at just tracing the way in which men and women have developed their passions and their careers and their values and their consciences and how they have implemented all of those in the context of the world around them over time. It's an interesting read. I'm still working my way through it, but it's certainly one to watch. And now what I'm going to do is I want to take you through a couple of the pivotal points for women as we look back through history and the way in which women have developed their financial liberalization is the only word that I can describe it as. So I am just going to bring you over here. Yeah, here you go. So what I'm going to do is that I tweeted about all of these and I'm going to share them here, and let's just contextualize each of these as we go along. First of all, between the 1860s and the 1890s, there was a greater increase in female wealth than in the previous 200 years of American history. And during that period of time, there was the gold rush. There was a massive expansion of the American economy, and there was also a dramatic proliferation of the stocks that were available, particularly from the railroad companies. And women were very much at the fore of that. Here's another one for you. Oh, sorry. Let me scroll down here. I found this one intriguing. Is that Massachusetts and New York back in 1860 were the first states, let me scroll in there, were the first states that gave married women control over their own wages or the money they earned through trade or business, as well as enabling them to make contacts on their own. 1855. And New York was 1860. So it's actually not that long ago since women had actual control over their own wages in particular. Previous to that, and if you look at any shows set in a previous era, women might have been given pin money, for example. That comes up a lot in Ladies of the Ticker, is where women would have got their earliest independent money. But when it came to them working and generating their own wages, it was actually only in 1855, which is really only about the last 160 years is when this has been the case. And it's interesting, just as I've said that now, John Boston has arrived. Hello, John, from Massachusetts, the first state to give this liberalisation. Hello, Margaret. Margaret says, I'm from London, UK too. Great to be here. Well, we're really, really delighted to have you. Now, let me take you through another one. In the 1840s, the New York legislature passed a Married Woman's Insurance Act that enabled a wife to insure her husband's life and to receive the benefits free from the claims of his creditors. Now, this would have been the earliest element or the earliest example of life insurance that could be given to a widowed woman at this particular stage. So, therefore, you can see that all of these things that today women might take for granted, they all had to come from somewhere. They all started somewhere. And this is the difference, is that what we might consider and what we might be celebrating on International Women's Day, therefore, when you think back, it's actually standing on the shoulders of many of these female giants is really where we can thank things like whether it might be gender parity in the workplace and the striving towards that, enabling women to succeed into senior positions, enabling women to be upskilled all the time into reaching their potential, and all of the other things that come with it. They might be today's concerns, but if you think back to 1840s, it was actually to enable a woman to be able to insure her husband's life, but also where they were free from the claims of his creditors also. Now, here's another one. Did you know the prenup actually began at the behest of a woman? Prenuptial agreements were another equitable innovation which gave married women direct control over separate property. They were favoured by widows or businesswomen who had already had management of their own property and did not care to lose control. So the prenup actually were for women who had property rights, or who would have when they had property rights, they would have had their properties, and of course their dowries is what they would have been bringing to the table back to these times. And if they had been married and their husbands had died, they didn't want to enter into another marital transaction where that might be something that could have been a challenge to them from the point of view of what they could do in preserving their financial independence and the retention of their property, and of course also how then that would have moved on to their children and so on. So prenups actually came from the behest of a woman who wanted to make sure that she and the family that came after her were protected should she move into a new relationship. So you may not have been aware of that. And this one also, I think that this is an interesting one as well. This is going to lead me over to Celeste Headley's book, which is, it has been estimated that 10 to 25% of women in colonial North America engaged in some form of entrepreneurship. And I added in here, I tagged Awaken Hope on this, because they're an organisation that spans Ireland and the UK and the US. And what they do is they're a community designed to enable women who are pursuing startups and pursuing financing and trying to grow their businesses and so on like that, to be in a warm and encouraging community. And I've had the opportunity to speak for them in the past as well. So hello to any of the Awaken Hub gang that might be listening. But there's so many various types of female entrepreneurship networks right around the world. It actually goes back to colonial North America, is where there was up to a quarter of women were involved in entrepreneurship. So what happened? So here I'm taking you through the late 1700s, throughout the 1800s. We're going to move into the roaring 20s as well in the 1900s. But what happened here? How was it that women went from having a large share of entrepreneurship, and that did decline? But what was the key point that changed that? Well, actually, I'm going to bring you to another book in order to figure that one out. And that is, come on over here to this book by Celeste Headley called Do Nothing. Now, sorry, I'm just going to show you that there. Right, so it keeps disappearing on me there. There it is. There's the book, Do Nothing. Now, I bought this book because I really didn't like the title. I am not a woman that ever does nothing. I am somebody that is super busy, and I love to be busy all the time. And even right now, my Twitter is going on over here. My YouTube is going on over here. I'm keeping a good eye here on the chat. Again, hello to everybody who's just joined. And I'm watching all sorts of everything here that's going on. And there's lots and lots of opportunity going on in our business at the moment. And of course, the technical team in the US are taking great care of me right now. So the whole idea of doing nothing, that just did not suit me at all. But I bought the book because I believe in finding voices that are out there that I disagree with, so that I make sure that I can find diversity in my thought process. So anyway, got Do Nothing. And you know what? It's so not a book that I had anticipated. So it's written by a woman called Celeste Headley. Many of you might know her actually. She's quite a famous author. She's a famous podcaster, and her TED Talk has been viewed tens of millions of times. And particularly what she did in this book is she looks at the past of work and really strips away what matters in the world of work and how people can really succeed. But there was one key chapter that she picked out, and that was, or that I picked out of her book, and that is, it starts with a steam engine. So what she does is she looks at the Industrial Revolution, and she looks back at that. And what I'm going to do is that I am going to read out just about half a page here, and this will tell you exactly all about what happened when the Industrial Revolution came along. So she says, because of the shift from people doing artisan work of maybe they were crafting, they were farming, they were blowing glass, they were making things and selling them locally at markets, and we didn't really have a big corporation back then. There wasn't the whole idea of people working in factories, because all of this predated the Industrial Revolution. But listen to what happened. She says, because of this shift, the world lost many of its specialised artists and woodworkers and sculptors and metalsmiths. She said, here's an interesting exercise. Take a look at some of the pictures of England's Houses of Parliament built between 1839 and 1842. Imagine how much it would have cost to have all that work done today, and you'll understand one aspect of what was abandoned when we lost our craftsman class. In factories, workers usually didn't develop the same pride in their work as they churned out dozens of items every day. So the focus in the Industrial Revolution went from being artisan, local, handcrafted, high cost, to streamlined, fast, efficient, low cost, volume. So what did that mean actually for the economy at the time? Well, then she says social mobility stagnated. Before the 19th century, it was possible to learn a trade and work your way into the middle class. But factories don't need tradesmen. They need bodies and hands, and they are just a handful of managerial positions available. There was very little opportunity for promotion or advancement during the 19th century, and it became nearly impossible to escape the working class. So with the Industrial Revolution then became the focus on power, strength, durability, resilience, work ethic, lasting for a long time, and sometimes in very, very difficult conditions. So then she goes on to say, all of these changes were significant, but something else shifted at this time, something truly momentous. Time began to equal money. Employees worked with machines that put out a relatively stable number of products per hour. So the longer the machine was running, the more product a factory would produce and the more money the owner would make. More hours meant more money. Employees were usually paid not by the task, as they had been for centuries before, but by the hour. I've tried to imagine what it was like for a worker at that time when they collected their first week's wages after a lifetime of growing crops or tatting lace. But I find it difficult to conceive of a time when pay was unconnected to the hours invested. Not only was this metamorphosis recent, but it was rapid. It may have begun in England, but it soon spread across nations and even continents. So the thing is that at that stage, the amount of money that people had was dependent upon their strength. And of course, in that case, men were stronger. So what this did actually was that it pushed a lot of women back into the home, away from entrepreneurship, because people didn't have time to spend. People also didn't have money to spend. And where advancement was going to come from was going to be in durability and speed. And when you go through her book now, her book really does elaborate on a variety of other things. But what her whole focus is on thinking through the impact that this had on the world of work that we had back then and how that's changed and what becomes really valued and so on like that. But I just found it interesting to see that how is it that we went from 10 to 25% of women in colonial North America engaged in some form of entrepreneurship to a dramatic decrease in that, and where we spent the last century trying to build that up again. Actually, the Industrial Revolution was a key change along the way. But let's now also move on to another change. Because you know what I find very ironic here, and this book, by the way, is a winner. Ladies of the Ticker. Now it's like you can see here, the font is quite small. It's a thick read, but really, really good, like super good. And I've given you a couple of quotes from it, but let me go back. Let me bring you right back. And then what I'm going to do is I'm going to introduce you to some interesting female investors. Some of them you know of, some of them you won't. And let's just see what we're going to learn from them. So if we go back to the Victorian era, okay, so we're going way back to there when I was telling you about from the 1860s to the 1890s. I'm going to let me go back there to that tweet for you again. Let me just scroll back here, and I'm just going to remind you of this one over here. Okay, let me go back to this one. So this is where, as I said to you, between the 1860s and the 1890s, there was a greater increase in female wealth than in the previous 200 years of American history. So we might be wondering, okay, well, what was going on then? What happened? And as I said, there was an expansion of the railroads. There was an expansion of the amount of stocks that one could invest in. But where did women actually stand at the time? And how has that changed? So let me take you through what Ladies of the Ticker is going to tell us. This is literally in its introduction. So what it says is, the period between the railway boom of the 1870s, so here it is, the 1870s and the Great Depression of the 1930s, was one of almost continuous financial expansion in the United States. Although women were barred from politics, the professions, and many forms of enterprise, they could participate in the period's robust investment economy by buying and selling shares on the stock exchange. In their pioneering study of the origins of the Victorian middle class family fortunes, Eleanor Davidoff and Catherine Hall argue that shareholding was seen as especially suitable for women, who were less likely to inherit the family business than their brothers, but who were the primary beneficiaries of passive property yielding income only, trusts, annuities, subscriptions, and insurance. And in that opening chapter, what's intriguing about it, in my opinion anyway, what's intriguing about it is that you see how the view of women at the time who chose to invest. Some deemed women should be very, very up to date on budgeting and managing the family finances because they were going to be at home and they were going to be people who were going to have to take care of various different elements to do with the children and to do with the legacy of the family and so on. So therefore they should have been up to date. Others took a very different view entirely. They said, well, women don't understand the way in which business works. Women also can be too emotional for the stock market. The thing is, history has actually proven that very wrong. Women can be very, very solid throughout an investing period and can actually be less volatile than our male counterparts when it comes to investing. And we also know when it comes to the research of when you kind of a more gender diverse board, Not just all men and not just all women, but when you can have diverse boards, diverse management, and so on like that, you can see that there's actually better returns, whether it's investing in the stocks of the companies that are run by those, or simply the returns on investment to the bottom line, as well as the expansion of the triple bottom line as well. So at that period of time, despite the fact that the women were barred from the professions, they were not barred from investing in stocks, and that they did. So now let me bring you over, and can I now introduce you to 3 interesting, very interesting female investors who have come through history, and let's see what we can learn from them. Okay, so I'm just going to check on over here. How's everyone doing there in the chat? Hope you're all doing well. And by the way, the three books again that I'm referring to is In the Company of Men by Eileen Scully, Do Nothing by Celeste Headley, and Ladies of the Ticker by George Robb. Okay, so now what I'm going to do is I'm going to pop on over here and let me introduce you to the first woman known to you all, and that is Eleanor Roosevelt. Now, Eleanor Roosevelt would not have been known necessarily for her investing prowess. She was, of course, the wife of Franklin D. Roosevelt, and she was a woman that has made her absolute mark in history. Certainly somebody. Thanks, Sandy. Delighted to hear that you love the topic. I've loved researching this one. And during her time, and it's interesting what I find about Eleanor Roosevelt is that her time was, of course, her husband's time was when he was elected as American president 4 times, and he would have worked and been president of an America that was a very, very changing place. Throughout the World War, of course, as well, he would have been here through that, and throughout a dramatic change in the way in which the world of work was working, a dramatic expansion of the public service, and lots and lots and lots of other things. I mean, obviously, we could fill a show on that, but Eleanor also has her own reign, if you want to call it. Eleanor Roosevelt was somebody that took her time when her husband had the role that he had to make her own mark. And of course, there's many things that Eleanor Roosevelt did, but particularly what she was a pioneer of human rights and having a declaration of human rights, and a lot of things can be traced back to her from that point of view. But she was also a woman that had great trust of people. She was a woman that would have had quite a sad background. If you look into her background, it was quite a sad childhood that she had, and their marriage wasn't exactly wonderful either. But she was a woman that really took her role and the prominence that she had at the time very, very seriously in order to do a variety of things. Now, of course, again, nobody's perfect, and there's things that I'm sure many of you could say for and against and so on like that, but she's certainly a character that would have espoused a very kind message and to make a difference. So what I want to do is I want to bring you down here. This is an actual recording on the 3rd of March 1935. And so you can listen back to it. What I'll do is that I'll put, I'll just make sure that's available for you afterwards. But just going to scroll on down here. And what I want to bring you down is, so you'll see here, basically what she's espousing is people investing in bonds, and she speaks about why and so on. But I want to bring you down to one particular statement that she made. Look at this now, right? Look at this. Okay, here we go, right? Let's start here. When you are a stockholder, you are always more interested in what your company may do. So she knew back then that if you have women at the table, and in this case she was particularly talking to parents, but let's stick with women. So what she was aware is that if you have got skin in the game, if you're invested, you absolutely are going to have more insight. You're going to have more interest. You're going to have more vested interest in what happens. And she says, and it's a good thing for democracy to have an interested group of stockholders. The sale of these bonds, so she was talking about government bonds at the time, has been going at a very steady rate with practically no promotion by the government. And the only reason, government of course, that her husband would have been president of the time, the only reason that I've wanted to talk to you about them today is because I so frequently have brought to me the difficulties of older people who are left with little or no means in their declining years. And then the difficulties of young people who want to continue their education or want to get enough money to specialise in some profession. And this is the quote that I really want to bring out to you. A little systematic savings and investing would save many heartaches for the ages and give many a youth a better start in life. And that was where she finished. And then there was music playing and so on like that. But I just think that was a genuinely interesting piece of advice to give to people that would last long long into the future. So I thought about this and I thought, okay, well, you know, how might we look at that and what could we take from that? Well, first of all, I think it's worthwhile. If I'm just going to pull up the VectorVest system here, and let's just take a look over here, right? Let's just take a look first and foremost. I'm just going to swap over my screen here. Let me pop over here, right? So what I'm going to do here is let's just take a look at the S&P 500, right? Let's just take a look, because when obviously I know she's talking about bonds, but let's just focus on stocks. So what I'm going to do here is I'm going to take off the lines there at the bottom. Now what I'm going to do is I'm going to point out that I know it has been a very, 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 very rocky road over the stock market over the past year. Okay, over the past year, of course, we've seen all sorts, right? We saw a massive decline last February. We saw an incredible rally from March to June. We saw a little bit of stagnation. Then the governments all started their printing presses again. The stock market has been rising. Then, of course, what we all saw, I was delighted to do it. I stepped in for Glenn for Trending Thursdays a couple of weeks ago when the Wall Street Bets gang were driving the market crazy. And so that there's been an awful lot going on, right? But look at, over in the grand scheme of things, look at what the stock market looks like over the past. So here's the last year, as I say, crazy rocky road, and even at that, you can't even see here the big drop that was happening here. Okay, but anyway, let's go back. This year was, of course, all that happened here between 2008, particularly February 2008 there until March 2009. You can see here that's a very, very substantial decline here as well. And then back here, of course, this is September the 11th, when the market, and not just that, of course, not just September the 11th, 2001. What that also is when the tech bubble burst. Take all of that into consideration, right? I wanted to start with the negatives first so that you can see that I'm not trying to, overcompensate for anything here. I'm making the point that these things happen. And I've been in the markets since I started investing in 2007. And you know what? It was a great time to start investing because I learned a couple of harsh lessons at the beginning, and I see that it's not all just plain sailing. Far from it. But the point is that if you take all of these into consideration, if we go back as far as here, so the graph here is letting me go back as far as June 1997. Okay, right? If we go back here, let's say here, if I had bought the S&P 500 ETF, which I could have done because the S&P 500 ETF, which is a fund that simply tracks an index, and I talk about ETFs a lot. So if you're on the show or if you are on any of the other shows that I've been lucky enough to be on, like Trending Thursdays with Glenn Tompkins or the Hot Stocks panel, you'll often hear me talk about exchange traded funds, fastest growing financial product in the world for the past decade and more. So let's just assume that you bought the S&P 500 ETF back in 1997. You would have bought it at 89.72, right? Today, that is trading, like now the live price is up there. You can see it is trading at $390, despite the fact that, yes, that would have been very, very nasty. That was nasty. But the point is, and if you think back to what Eleanor talks about, I'll read it out to you again. A little systematic savings and investing would save many heartaches for the ages and give many a youth a better start in life. So the point I'm making to you is that what if you had been simply regularly investing a couple of $100 or a couple of €100, and of course before 2002, if you were in Europe, you would have been in your various own different currencies. And I know, of course, a range of people here from the UK, a couple of £100 sterling every single month, and maybe you didn't have it, and that's fair enough. But imagine if you put £50 away, so that then every 12 months you would have put £600 into a stock. That, of course, is the whole idea of regular investing. And that is the way in which to avoid feeling the pain of investing up here and then being disappointed the whole way down, or here, which was me, or here, right, is because if you're systematically investing, just like Eleanor is pointing out, look at the difference that can make. Now, let me go back further though. Let me go back a little bit further. Pop on back over here now. Let's just take a look at a 100-year history of the US stock market, okay? let's just take a look at that. And I'm going to pop you over here now to my other screen so that you're going to be able to see this. Okay. Okay. Now, me just, I'm going to accept all that. Now, right. So let's just scroll on down here. Now, this is, my head is in the way there a little bit, isn't it? Okay. So what I'm going to do, let's just move me over. Let's just move you over. I'm just going to move me over here. A bit like Michael Jackson there. Okay. So now, first of all, you can see here, doesn't this look like a lovely, smooth, kind of, you know, choppy, but smooth enough graph? The thing is, when I take this off log scale, you're going to see what the difference this really makes. Now look at that. Is actually the stock market over the last 100 years, actually, when you look at it, while this may have looked like that there wasn't an awful lot of pace happening, just remember that back here was the 20s. The 20s was going to be followed by 29, and what happened there in the 30s, then of course we had the world wars, then we had the expansion in the 40s, and then of course as we went on, then we moved into the 60s, and then from the 80s onwards we had a dramatic expansion of the financial markets. Up here, where are we? Let me go back there. No, let me go back again. Back. Here we had the inflation crisis back here in the mid-70s. Then of course we had Black Monday back here in the early 80s, and then of course as we go on, then of course we can find some much bigger issues. These are the elements that I showed you in bigger detail back on the graph. And then we had 2008, and then we had all of this COVID business, and now we are right up here where we are. So this is the 100-year path of the stock market. So for sure you can have periods of time like that, and for sure you can have periods of time like that, and for sure you can have periods of time like this, and for sure you can have periods of time like this. But overall, if you are consistently investing in doing something, regularly investing in something like an exchange traded fund, well then that can be a really, really, really good way in order to do, like Eleanor says, here's what she says up here again. She says, a little systematic savings and investing would save many heartaches for the ages and give many a youth a better start in life. Now, maybe you don't want to just consistently invest, right? Maybe you don't want to do that. Maybe you want to get in when it can be a good time to do so and get out when it is a less good time to do so. So how do we do that? Well, that's when you're going to have to take a different approach. If you're not going to consistently invest and avail of euro cost averaging or dollar cost averaging, which is where you're buying in all the time, well then you can buy at high prices and low prices, then you need to use what's called market timing. So let's switch on over and I'll show you how to do that then. Okay, so over here we go. Now, let's just say that this again is the S&P 500 here. And again, the S&P 500 is an index, and an index is a list. And the list of stocks are the top 500 stocks in America, traded in America, as measured by market capitalization. In other words, the bigger the company, well then the bigger the market cap. And what they mean by market cap is the number of shares multiplied by the share price. So when we take the largest 500 companies in America, we put them on a list, and then a fund, an exchange traded fund in fact, tracks that list. That is what we call the S&P 500. Now, I might like to know when would be the time to get in, when would be the time to get out. Now, I'm going to scroll in because it's a bit hard. It's too hard to see on a short-term graph. So here is the past year. Right now, let me just go out a little bit because let's include the last year and a half. Okay, let's do that instead. If you were to do this, and if I was to click here on the confirm calls, now you can see that a couple of dots have appeared there on my screen. I'm just going to turn them off there again. Okay, so just put them back on. Now, there you go. So what they are these are an example of how VectorVest uses market timing indicators in order to help you understand when to get in and also when to get out. So for example here, right, so back over here, these are called the confirmed calls. So this is the most conservative investing market timing indicator that VectorVest has. So you can see here, what date was that? Let me see, what date was that? Now, that was the 28th of February, not even March, 28th of February, 2020. At that stage, the most conservative investing market timing signal from VectorVest said, out, get out of the market, get out of here. And so you would have avoided all of that, that rocky road that was about to come, which just was a crazy time, crazy time. And now this also, similarly, most conservative signal by VectorVest then encouraged people to get back into the market on the 18th of May and to stay in there until the 11th of September. And then as you can see here, you can see that there was some various other triggers along the way. You can see that. And there was another long one there between the 10th of November up to the 4th of March. And of course, the 4th of March was just a couple of weeks ago. Then it avoided, told you then to, now I'll just scroll in up here. Let me just scroll. Yeah. Sorry, that's too much. There we go. Now let me scroll in again. There we are. Now, so then now you can see here, sometimes the signals are false. And it's important that you're aware of that, is that sometimes the signals are false, like here. So in this case, it gave a signal to get out of the market, and then it told you to get back into the market a little bit higher. Now, you might say, okay, well, why is she showing us when it's wrong? It's because we want to be authentic and we want to show you when that happens. However, these signals, while that was a small, it certainly was false and it was in a short period of time, look how narrow that was. But the VectorVest system has never missed a major market turn like this one. Like, you might say, well, that's not a turn, but it is a turn. It's because previously it was on the way down. So you can see there was a very, very significant increase there, very significant increase there, very significant increase there. So that is the way in which, if you want to follow Eleanor Roosevelt's advice, that is the way to go, is either to commit to a consistent plan, or else you can also enter the market using market timing as your guide for when you might want to go into the market. Super simple way of going into the market is buying something like an ETF, like you see there. The S&P 500, largest 500 companies in America, simply tracks the market. And there's a wide variety of others. Or else, of course, you can take a more nuanced approach, and I'm gonna take you through that. So, just gonna give a shout out there to everyone there. How are you finding this? What do you all think of Eleanor Roosevelt's advice? Please do pop your messages there into the chat. I'd love to hear from you. Anybody that's on a mobile device, because that's what I'm using up here to keep an eye on you all, is if you're over here in the video and you're on a mobile device, you will see that there is the like. By the way, would you mind clicking the like button? I'd love if you click the like button. I'd really, really appreciate that. It just makes sure then, as other people might be researching the history of finance for women in the future, then they can look to this, and then this show will give them some indications, some book recommendations and so on. So really, really would love that. And of course, the practical insights that we can learn from these fantastic women as well. So if you are, I'd love if you press the like button, and thank you very much. And also then after you do that, click on live chat. I'm just going to do that right now, and I can see what everyone's saying. So Julie says it's great advice. Thanks, Julie. You're so kind. And by the way, the last time we met on the EU regional user group, I was telling you about this show and about Ladies of the Ticker. So really appreciate that you've come back here and you said it's a great presentation. I appreciate that immensely. Thank you very, very much indeed. Okay, who is our next woman that I'm going to introduce you to? Well, this woman now. Let's see what you think of this woman. So I'm going to bring you back over here, and now I'm going to bring you the peculiar story of the Witch of Wall Street. So Hetty Green is, of course I remember Julie. Of course I remember. Thank you. Julie just mentioned there in the chat, she said, you were indeed, thank you for remembering. Of course, I remember you all. I do. So, so this is the story of who they call the Witch of Wall Street. Now, this woman's story is very interesting. So Hetty Green basically was the world's first, in reality, she died with about 2 billion of today's dollars. And so she would be of the Gilded Age. Now, look at her there. Okay, so she would be, she kind of looked like that most of the time. If you read her story, and she comes up lots and lots and lots in Ladies of the Ticker. But it's just interesting to see how she does come up, and how, so this would be very much the demeanor that she would have. Now, the witch bit, I'll get to that as well, but I'm going to tell you what her secret was. But I'm just going to go on. She would have been, of her time, in her time, she would have been, and I'll just take you to here. In her day, Green's fortune was linked with the likes of Russell Sage, J.P. Morgan, John D. Rockefeller, and other financiers and tycoons of the day. But she would not be recorded in history in a similar way, and I'll tell you why. It's because she wasn't involved in business at all. She didn't believe in that. I want to tell you an interesting story about her, what she did when her dad bought her a wardrobe of clothes so that she could be more appealing to particular suitors. I'll tell you about that in a moment. But the point here is that what she was doing was simply investing. So despite the fact that she had lots and lots and lots of money, and I'll show you how much money she had in today's dollar terms, she was not at all considered to be in the same way, because she wasn't involved in business, and also she wasn't as visible as the others, and she's certainly philanthropy, not quite her thing. So I'm just going to show you here one story about her dad. Yeah, look at this. So by the time she was 13, Green had taken over accounting for the family business. 13! But when she was 20, Leek writes, Green's father bought her a wardrobe full of the finest dresses of the season in order to attract a wealthy suitor. What did she do with that? What did she do? Green sold her new wardrobe and bought government bonds with the proceeds. She sold her clothes. She sold her clothes at 20. And what's interesting here is, and this is why I want to take you through, the history of female liberalization and just the views of people at the time, because it's interesting that her dad bought her a wardrobe full of clothes so that then she could attract a suitor. In fact, he was buying her way towards a husband. She didn't see it like that. She saw that as limiting herself. And instead what she did was that she used the money to invest instead in government bonds, listening to Eleanor Roosevelt's her advice. Now, granted, Eleanor Roosevelt's advice came 100 years later, but you get my point. So as a result, she saw this as a way in which to pursue financial independence instead. Now, I'm just going to elaborate on, though. I'm just going to go on here a little bit, and I'm just going to scroll on down here, because the which bit comes soon. She would have been seen as somebody that was a massive value investor, and that would be very much her legacy down here. She made a material contribution to the field of investing, which shaped the 20th century. She was an innovator in the field of value investing, which made billionaires out of people such as Warren Buffett. She was eccentric, but in her own special way, she was also a genius, because she was also deemed to be somebody who was holding on to her money. She didn't go to the doctor if she was sick. That's something that comes up here, is that let me just get here she is. Look, after her fixation with making and maintaining money that grew and grew to the point where she wouldn't seek medical attention for herself or her children because of the cost. They all lived in cheap housing and moved frequently. And that whole idea of her being in that black coat, she would have been seen in the same clothes all the time. She didn't believe in buying clothes. That was money that basically had an opportunity cost. Why buy clothes that you could wear when they could be invested instead? Now, she died with an absolute fortune. She died with $2 billion, with a B, $2 billion of today's money as an individual. So she would have been extremely, extremely visionary for her time. And I'll give you her the way in which she did it as well in a moment. But I'm just going to take you through this. Through all of this, Green kept investing primarily in government bonds and real estate. So that was the thing. She wasn't interested in business. She was interested in things that she could invest in. Hetty died in 1916 with an estimated $100 million in liquid assets and much more in land and investments that her name didn't necessarily appear on. She has taken a $6 million inheritance and invested it into a fortune worth upwards of $2 billion in today's money, making her by far the richest woman in the world. And the big difference between her and others such as Carnegie and Rockefeller is that she wasn't an industrialist. Her sole business was investing in real estate, stocks and bonds. That might go some way to explain why she didn't leave a legacy of her name as her male peers did. Now, I personally don't think Hetty Green, now that I know her so well, billion with a B, Margaret, that's right. I don't think she was all that concerned about someone like me talking about her, where are we, 200 years later? I think the woman was quite focused on what she was doing at the time. But she was always really focused into value investing. She appears a lot. She appears a lot in this book here, Ladies of the Ticker. She appears many times. And the witch on Wall Street bit is because she always looked black. She always looked like she was dressed in black and would have been seen as quite miserly. And as you can see, didn't exactly spend her extravagance at all. So that's where that comes from. But if we were to learn from her, right? If we were to learn, the elements of value investing, what is it that we would do? I'm going to pop on over here to the VectorVest system, and I'm going to show you a way of doing this. But before I do, I'm just going to say, Margaret says, it's great advice, Susan. Thank you. Can you do more presentations? Absolutely, Margaret. I'm right here with you. And by the way, on this channel, if you go back through Fantastic Female Fridays, you'll see 10 previous episodes of this. Now, this one is a more narrative focus, all right, but there's a range of episodes that we have here. And also, you will see me as well we have some other ideas for things that's going to be happening in the next while. So, Margaret, keep here with us, and we're only delighted to have you. Okay, so I'm just going to pop back over here. Now, let's go over, if we were to think like Hetty, who I'm now on first terms with, or first name terms, I should say. Now, here we go. What would we do if I was to think like Hetty? So what does value investing mean? Well, value investing means in finding stocks that have interesting possibilities to for investment, not based on very high valuation metrics, but based on low valuation metrics. So let me give you an example of that. Great to hear, Margaret. Well, I'm only delighted to hear from you too. Okay, so let me go over here, and I know it's quite it's quite small, what you can see there on the left hand side, but don't worry, I'll expand it out. So if I was somebody, right, let's say that I was a prudent investor over here. I think we could all agree that Hetty was a pretty prudent lady, wasn't she? So if we go in here to prudent investing, in here is a wide range, wide range of strategies that I might pursue if I was looking to be a prudent investor. So in here, for example, good and cheap, that'd be the type of thing now she'd like. So good and cheap, what does good and cheap actually mean? Okay. So now, again, I'm appreciative of the fact that I know that, particularly on a mobile device, that's very difficult to see. Now, I can't expand, I don't think I can anyway. I don't think that I can expand. No, I can't expand this any bigger. So just let me talk you through what's up here. So first of all, this strategy, good and cheap, looks for stocks where the growth rate is at least 7% or higher. So the growth rate of the earnings, looking ahead 1 to 3 years, what is the growth rate of these earnings for between one to 3 years? So good and cheap looks for stocks where the earnings growth rate is at least 7%. Now, I'm sure that what she would have looked for as well were companies that had great potential to grow in the future. Also, we're looking for stocks that are under $15 a share. We do not want a stock that has a sell recommendation, and specifically in VectorVest language, what that means is that the stock price does not fall below the stop price. That's what we need to make sure of here, is that the share price does not fall below the stop price, because then we get a sell recommendation, and we don't want that one. We want the relative safety to be above 1.25. So in the case of VectorVest language again, this would be where the relative safety is a stock's consistency and predictability of the share price. So, sorry, let me say that again. The consistency and predictability of the financial performance. Apologies. Good thing that I corrected that in time. So, consistency of the earnings and predictability of the dividends. So, above 1 is favourable, below 1 is unfavourable. But when we go above 1, we want it to be even further. We want it to be above 1.25. The maximum is 2. So, we want to be, we want earnings and dividends to be good. Wouldn't we, Hetty? I'm sure we would. Now, we also want the stock price to be above €1, and we want the average daily volume to be above, I think that's 1 million. No, it's 100,000. It's 100,000, and we don't want any short ETFs. Okay, and let's run this search, and you will see now, oh, no results found today. That is interesting. No results found today, and that is, so I would just like to see what I might need to take off the table there in order to find some results. But you see the whole idea of what or how a search might be built in here. So there's a range of others. Yes, exactly, Ursula. No results found in good and cheap at the moment. Well, then again, the market has been, doing its thing and driving forward for a while. So that's an interesting result there. The other, there's a range of other strategies that I could pick for you in here, under the prudent search box. But do you know what I'm going to do? I want to bring you somewhere else as well. So I want to show you one other spot. Now, that isn't working for me. So, 2 found in Canada, says Robert. Now, for some reason, my VectorVest there isn't quite playing ball for me. No, it's not. Okay. Let me go over here. No, it's not. For some reason there, it just doesn't seem to be. Okay, well anyway, that's okay. What I was going to show you is, oh no, it's literally frozen on me now. Okay, well anyway, what I was, oh, now I know why. Okay, let me cancel that. Now I know why. Okay, So the other folder that I want to show you is focusing on, we get these over here for you, is bottom fishing. So this bottom fishing strategy, now this is where I was. This is where I was hanging out around about last April. So the bottom fishing is where you're going through a market where you're finding where it's in a high growth market, and then you're finding stock that have been really beaten down, really beaten down. So these are there's a range of these in here, but particularly the one that I wanted to show you is the RT reversal. So RT, I told you about RS. Okay, so RS is relative safety, and relative safety looks at consistency and predictability of financial performance. But RT is relative timing. So relative timing looks at the direction of a stock, the magnitude of its direction, so how quickly it's going up or going down, and also the dynamics. So is it very, very volatile, or is it, taking its time and rocking and rolling? So that's what RT looks for. So when you see a stock having its dynamics moving down, then that can often mean that those sellers are winning the war against the buyers and they're pushing the price down. But when you see that reversing, that can be a very interesting time to buy. And this is exactly what I was doing throughout last summer, is looking for stocks where the RT was turning around. So you can see here that this search is built where the RT, and again, I understand particularly on a mobile screen that it can be quite difficult in order to find. So I really do appreciate that, and that's why I'm reading everything out here. By the way, please do keep your comments coming in the chat. I'm only delighted to hear from you. I see that we've picked up some new visitors. You're super welcome, guys and girls. You're more than welcome indeed, and I really appreciate it if you wouldn't mind. Would you mind liking, pressing the like button as well, so that as future people come back and they want to find out about what we can learn from women of finance in the past, that they'll be able to easily find us. Okay, now, what I'm going to do, Julie, absolutely, I can show you anything you want on another day. We've lots and lots more episodes of Fantastic Female Fridays to come, and absolutely, more than happy to do that. Now, so here's the way the search works, is that it's RT, so it's relative timing, and how it changes its trend there from minus, so going down and down and down and down and down, to then going up. Also where the price is greater than 1, greater than or equal to 1, and where the volume, the average volume is over 100,000, again, no short stocks, and where the search is run, or it's ranked by VST. Just going to run the search there now. And let's just see. There we go. Lots of interesting opportunities there. Now here is where I'm going to make it much easier for you to be able to see. Okay, so I'm just going to click layout here. I'm going to click layout, and what I'm going to do is I am going to change the size of the font here to 18. I'm going to double the size of the font. I'm going to click OK. I'm going to click OK again. And now, there you go. Now you can see the types of companies that are up there. Best Buy, that's interesting. Now my head now is kind of in the way there, but you can see the lots of different stock opportunities in there. And I'm just going to find for you. Let me just find here. There's value, there is relative value, there is relative safety. Remember the consistency and predictability that I was talking about earlier? Now what it's actually doing there now is it's re-ranking the whole lot in that, and I don't want it to do that, so I need to go back and tell it to behave itself. And okay, so let me just double click here on this. Yeah, okay. So you can see here that, there we go. Now you can see the stocks there ranked by VST. You can see there all of them. So Hilltop Holdings, Viacom, I'm not exactly sure what that is. Tractor Supply, Best Buy, Thermo Fisher, Nasdaq, Danaher, and so on from there. So that might be the way in which somebody like Hetty might be looking for stocks, as ones where the trend is turning, or where they've been really beaten down in the stock market. Looking at something like Good and Cheap. There are two examples, bottom fishing and Good and Cheap within the prudent folder. They would be two that you might be interested in looking at. Now, let me introduce you to the second last, right? The second last woman. And I understand, the thing is, we started off this show where it was going to be 30 minutes. And you know what? You can't stop an Irish woman talking after 30 minutes, really, can you? So that's why we expanded it into an hour. And even at that, I know I'm going to go a little bit over, but stick with me. Stick with me, because it'll be worth it. So I'm now going to introduce you to the third last woman. second last woman, and then the last woman I'm just going to give you a snippet of, okay? So the third woman that I want to show you is this woman up here, and this woman is Mary Ellen Pleasant. So she was born in 1814 and she lived until 1907. Now, interesting, she was born into slavery, this woman, okay? So she was a woman of colour and she became a gold rush era millionaire and a powerful abolitionist. Now, this woman, what can I tell you about her? Well, I can tell you a lot about her, but let's just say everything she invested in now wouldn't have been squeaky clean. So just bear in mind that when you if you were to go and look at her, she's an interesting woman. So basically, when the gold rush was happening, she moved west as well. That way, she moved west as well to San Francisco. And then she started investing in certain. I'm just going to bring you on and I'm going to show you what she invested in. But if I just scroll on down there now, she also partnered with a man. Now, it's hard to know whether she partnered in business or partnered with more than business. But let's just say she partnered with a man sometimes because where is his name now? We'll meet him there now in a moment. But here we are. In 1848, the California rush began. And this was the thing that... So there she was, a woman that was born into slavery. And as soon as she saw opportunity, she followed it. So she moved to San Francisco and found work as a cook. She was invisible and, as this is described, unimportant. But this is interesting now. She shrewdly eavesdropped on the wealthy people she served, and using the information, invested bits of her inheritance. This woman would have been definitely a VectorVest subscriber at the time. She may not have had the subscription herself, but she'd have been in the right place. She probably would have been saying to the people who she was serving, you should really check that out, it'd be worthwhile. And then she'd have been running her own searches. I'd say she was great. So she says it's quite possible that the job she has as a domestic were a cover that she was using because she clearly made money from her investments. Now, but look at what she invested in. And here's what I think is quite interesting is her portfolio grew to include shares in businesses that range from dairies and laundries to Wells Fargo banks. She owned restaurants and boarding houses. Now, here's what I'm saying is that, well, they weren't all exactly squeaky clean. And in the 1890 census, isn't this interesting? She called herself a capitalist by profession. Now, what is the commonality here? Right? Let's look at all these. What are the commonality here? Dairies, laundries, and Wells Fargo Bank. Okay? Even let's just take out the actual businesses she owned. Let's just look at the shares that she bought. Do you know what strikes me about this? You know what I think? You know what I think about Mary Ellen? Is she was a woman who found businesses that were defensive. These companies did not move in line with the economic cycle, which was very, very clear and changing at the time. Particularly think about that century that she lived through, all throughout the 1800s, all about the expansion of the railroads, and before that as well, earlier on in the 1800s, when she may not have had an awful lot of female liberalization when it comes to finance. She may not necessarily have had that, but yet she found companies that didn't rely on the economic cycle, didn't rely on them at all. And that's what I think is quite interesting about her. Now, here's the part where I want to tell you about. The rest of Pleasant's life was a zigzag of fortune and power, infamy and blame. She formed a decades-long business partnership, possibly romantic, with a white man called Thomas Bell. And after his death, it turned out that much of Pleasant's portfolio, including the mansion she designed and that she built, were held in Bill's name. Historians believe the pair used his name because of the business dealings to facilitate what surely would have been more difficult for a woman, and especially a black woman. Bell's widow sued Pleasant and won control of the Bell estate. In an instant, Pleasant's fortune was diminished. So she's an interesting woman from the point of view, she died in 1904 and she became quite a famous figure, and on we could go. But it's just what I think is interesting for her, in contrast to Eleanor Roosevelt, was born into an environment where she was of a pretty privileged position. And I mean, if you think about it, Hetty Green was born into a $6 million inheritance. She was born into slavery. Now, granted, it looks like that there was, colouring outside the lines were certainly done there from time to time. But she was a shrewd woman who used bits of her investment, as she said, where she was a professional capitalist. So if we were to look for defensive stocks, where would we find them in VectorVest? Okay, well, let's pop on over there. Let's take a look and see where exactly we would find them. on VectorVest. And again, I'm super happy there to see people are commenting there in the chat. So please do put your comments in. I'm only delighted to hear from you. And of course, I am now coming to the end of today's show. So if you have any ideas about what you'd like me to cover in future episodes, I have so many stories to tell you of female investors from the past. So many stories and so many narratives as well to talk to you about how money has changed things from a political and an economic and a social and a technological and a legal and an environmental point of view. I didn't just come up with that, by the way. That's a pestle analysis. So if there's any particular elements that you would like me to talk about in future episodes, pop them into the chat. Of course, I'm only delighted to see them. So if I was to think like Mary Ellen Pleasant, you know, the investing side of things anyway, what is it that I might do? Let me see now. I see there's thanks, Julie. Wonderful. I agree. Great to hear about women investors of the past. And by the way, this book is absolutely full of them. Really different as well, coming from very, very different scenarios and perspectives and of their time, Julie. That's the thing. They're of their time. Now, what would I be doing if I was looking for defensive stocks? Well, what I might do is that I might go up here to sectors. So I can go up here to my Delta searches. And again, I'm completely understanding that I know on the, here on the mobile screen in particular that it can be quite difficult to see. So I'm aware of that. And that's why I'm going to read out everything for you. Okay. So what we could do here is we could take a look at, let me see here. We could take a look at something like, let me go up there. We can take a look at the 1 week, let me go 13 week, right? So 13 week is a quarter. Okay, I'm going to run the search here. Okay, so what you can see here now that I'm doing is that I'm looking for, here we are, there's our sectors, right? Here's our sectors over here. What I've run is that I have run a 13 weeks, that's a quarter, delta. So how have these sectors changed over the past quarter? So this is where I might be looking, where is the underlying trend rising? And then I could apply this to the type of sector that I might be interested in. So for example here, petroleum, office, steel, bank. Wells Fargo Bank was a bank over here that Mary Ellen Pleasant was interested in. Let's take a look, for example, at the type of stocks. Let's start off with the industries in here. So the industries that are moving the most quickly are multi-regional, West, Southeast, Northeast, Investment Bank, Midwest Foreign. Let me just double click here on multi-regional and let's see what type of companies that we've got. And let me just minimize this now because I want to be able to see it. Okay. Oh, sorry, you couldn't see that, could you? Sorry. There you go. Now I've just moved it up. A window just appeared up there. So now I'm just going to double click here on that. And who knows where the stocks are that they're going to appear around here somewhere. So now you can see there on the industry, you can see exactly. So if I was to, now that's appearing again elsewhere, you get my point, is that by double clicking on my windows here at VectorVest, I will be able to find the different type of sectors the sectors and then the industries. And then from there, I can look at the stocks that are moving fastest. Now that is the way in which you can do sector specific searches, where you might just be looking for stocks that generate defensive cash flows. Or, of course, and I cannot really, any of you that have been here with me before, any of you that have been here with me before, you know that I'm a big fan of dividends for their income generation. Bit like Hetty, I'd say, would have been now, probably reinvesting as well, and Eleanor Roosevelt as well. Certainly for sure, I would imagine they would have been interested in those too. So where we can find dividends particularly would be under conservative. And despite the fact that the investors I've been telling you about today may not have been overly conservative, if they were income focused, that could be deemed to be dividend yielding. Sorry, if they were income focused, that would be deemed to be conservative. Kind of disagree with that characterization myself, but I'm just me. Discounted dividend pairs here. So if I was to look at these stocks, for example, you can see here, this is where I would want the dividend yield to be at least above 2%. And so here we go. If I was Mary Ellen Pleasant now, what I might be doing is, yes, I would like to see that the dividend yield is greater than 2%. And I know that it is because the search is built that way. And then I can scroll right on over here. Now I'm going to have to move me out of the way again. I'm going to slide to the left. Crisscross. Okay. So every time I do that, Joey starts singing and he starts clapping his hands. Hi, Joey, by the way. Thanks a million for everything that you're doing there today. Taking care of me. Do you know how often Joey's had to look at me topping up my makeup before we go live? Poor guy. Okay, let me just scroll on out here. Now, there we go. Here I can find... Someone's laughing out loud there in VectorVest. Wonder if it's him. If it's not, then they're laughing at me, laughing at him. Who's laughing with me? Or, anyway, you get my point. Hi, Joey. Okay, it is him indeed. Okay, so you can see here, petroleum, telecom. Now, isn't this interesting? Isn't this interesting? Petroleum, telecom, REIT, financial. Look at those top 4 stocks here, right? Top 4 stocks, all in defensive sectors. And as a result, all of those would be companies that can generate a significant dividend. Now, the other thing that I would be doing though, if I was Mary Ellen, if I was doing that, I would be looking at DS, dividend safety. And I would want to see that are these dividends safe. I don't just want stocks where I'm finding that they are available at a good discount or where they're generating good dividend yield. So what I could do is I could personalize the experience here. And I'm going to say dividend analysis, dividend safety. And what I want that to be is at least above 50. Let me just do that now. 50 and run that search. Now let's see. This is more Mary Ellen Pleasant-esque. And there we go. Now we're talking. And you know what I'm going to do? One more thing. Let's pop over. What sort of sectors have we got now? Leisure, market, utility. She was big into utilities as well. If you research her, she was big into utilities. But of course she was, because she was interested in companies that could offer long-term price appreciation potential. And just remember again, towards the middle of the 1800s, so in the 19th century, there was the great expansion of the railroads as well, which take up a huge amount of various different securities available. So lots more going on over there when it comes to her. Just going to pop on over here. So Ursula says, is it possible to sort the VectorVest screen in Unisearch by 2 columns like RS and percentage price? It's not. You can only search rank by 1, but what you certainly can do, Ursula, is that you could create a column where you multiply one by the other, and then the combination of the two will come up highest. You certainly could do that. Somebody tells me I'm still beautiful. Well, I'm delighted to hear that, particularly since my husband is also here watching. I'm hoping he's agreeing with you. Then also I see somebody else says, is buying stocks in the defensive sector worth buying into? Well, you see, you'd want to look into it a bit more than that, rather than just saying the defensive sector. Like, as you can see, what I've done there is that I've looked into it from the point of view of, let's say, a dividend, and then also the safety of the dividend. So rather than just saying defensive, instead I would look into it further along with what you really want to see. Maybe if you're looking for the defensive sectors as well, you might be looking for stocks that have a lower standard deviation or lower volatility than stocks, let's say, that might be in the cyclical sectors, and that then is where you look at RT, relative timing. Oh, Ardell has just agreed. Well, you're very good. Now, can I bring you to the last woman? Last woman, and this time I'm going to bring a zoop right to the present. Let's move from the 1800s and the late 1700s, the early 1900s. Let's move to the year 2020. Not quite this year. Just go 1 year back. And let me bring you on over here. Last time I'm going to switch around. Well, second last time, because then I have to bring it back to me. But last time, and that is this woman. And that is Linda Royer, CEO of VectorVest. This is the woman that I want to introduce you to here. So on one episode of Fantastic Female Fridays, I had I was very, very fortunate to be able to interview her. It was the first ever public appearance that she had done in this phase as CEO. And I want to give you one piece of advice that Linda shared with us. And I hope over the years that you'll hear an awful lot more from her, because she is a woman with infinite wisdom. And I'm very grateful that I have had the chance to work with her for many, many, many years now, but more particularly in preparation for this particular session. I had a great chance to get to know her better and to get to know her investing personality better. And the one piece of advice that she had a bazillion, but one key thing that I took out of that is that she says it's really important that people understand that the stock market is an opportunity to level up. Is that when you start investing and you start investing the way I was talking to you earlier, whether it was consistently using dollar cost averaging, using market timing, finding a portfolio of stocks that may be prudent, or maybe ones where you're very, sharply looking towards an RT, relative timing reversal, or also where you might be looking at something that is on the rise because of underlying growth potential or because of dividends, any one of those. That is the way in which you can for sure find a way in which to level up and to find what we call economic mobility. So I did also want to show you that episode, Let's Talk About Money with Linda Royer, CEO of VectorVest, is up on YouTube. It's up there, and I just wanted to finish with her, a great woman of today. But the reason that we recorded this on the 7th of August 2020, so that's why I wanted to finish with her. So bringing you back here, back to me. I just want to thank you all for being here. Travis says, thanks for the stories of those powerful women. You're super, super welcome. Super welcome indeed. It was my pleasure. Really enjoyed researching the brief for today. I have to say, I really did. I loved going back through time. And who was it there said, one of you there. Oh yeah, Margaret said, I'm definitely going to buy Ladies of the Ticker. Thanks for the book recommendations. You're most welcome, Margaret. But there is such a window into the past through it. And I have others too, so I'm excited to share them with you. And I'm really delighted that you enjoyed today's episode, where we looked at elements like that and where we can learn from previous stories, and we can look at the characters of these women as well. As I say, they're of their time. It's interesting to see they were educated, how Hetty sold her clothes, and how, Mary Ellen was listening to she was listening to her wealthier people that she was serving, and, she was getting tips of a different sort. And then, of course, the way Eleanor Roosevelt used the platform that she had through her husband to be transcending right across 100 years of history. Now we're, close enough to it. So on that note, if there's any questions at all or any comments that you have, pop them into the chat there. I'm only delighted to see them. Thanks a million to the guys. Thanks to Clay. Thanks to Joey. And of course, and thank you indeed to everyone who's putting up lovely messages there in the chat. I really appreciate it. Going to see you soon for the next episode of Fantastic Female Fridays. And of course, lots of other VectorVest content is happening here on this channel. So if you haven't already, click subscribe so that you get automatically updated, and make sure to click the bell so that as soon as any one of us goes live, you will then know and you'll get notified of it. But I really, really, really enjoyed today. Thank you so much indeed for being here with me and spending a fantastic Female Fridays right here at VectorVest. Thank you, everyone. Have a lovely weekend. Bye.